Welcome to Stocks in Translation. I am Jared Blikre, your host, joined as always by the people's voice, Sydnee Fried. And thank you for tuning in. Before we jump into the conversation, be sure to like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, YouTube, wherever you get the podcast. And today we are welcoming back Jay Woods. This is your third appearance at Trifecta.
Yeah, do I get a gift or a present for coming back 3 times?
After the show, we're going to
get a round of applause.
Yes,
right,
by the live studio audience we have here.
Maybe at 5 times I'll get a jacket or something. I'll look like you.
Like
guys.
Steve Martin when he hosted Saturday Night Live 5 times.
Exactly, in my 5-timers.
Today, we're going to have a heavy markets discussion because there's a lot going on right now. Word of the day is rotation. We've addressed it before, but it's time for a refresher since we are seeing a lot of that right now. Episode is brought to you by the number 25. That's how many basis points of easing that bond traders are pricing in right now for the Fed. That is one cut because the odds of going 2 are now 0. But before we dig in, Jay, we want to get your overview of the markets. Record highs. We got an intraday record high on the S&P 500, something like 48. Incredibly, we hadn't had 2 back-to-back winning days in the S&P for 2 weeks, but it looks like we're going to have one today, so that streak is over. Are things resolving to the upside here? Are you worried at all?
You just jinxed it. Who knows what happens in the last few hours of this market? You don't count your chickens,
especially
until
during the
they're
lunch
hatched.
hour.
I don't know what the hell that expression means, but no, we're on a nice run, and we're doing it in a seasonally weak period of time.
Yes.
We're doing it. We got through August and September, surprisingly, without any major downside. We did have August 5th, the Japan yen carry trade, and the VIX spiking to 65, but we survived it. That's as resilient a market as we've seen in some time. 48 new highs, and that number will probably increase as we get through the election into year end. It's a bull market, and this is what you do in bull markets. And your word of the day rotation, we'll touch on that. But what we're seeing in this market is we're going from one sector to the next. And you look back at this third quarter, the setup for the fourth quarter is not being set up and led by technology. Technology out of the 11 S&P
kind of take a back
sectors,
seat now.
It was flat. It did nothing. And now what's starting to lead? Technology. And what we're seeing under the surface there is fantastic. And, the expression rotation is the lifeblood of a bull market. That is, all right.
Yes, we're going to run with
You
that.
go there.
I love that definition. I got a slightly more technical one, but the lifeblood of a bull market. Rotation is a movement of money invested in stocks from one sector or industry to another, as investors anticipate the next stage of the economic cycle. So, as you said, we saw the rotation last year. We saw the Mag 7 leading, and then I think in June or so they flagged, and then in November, things picked up in September, October, maybe, and then November hit, and then it was small cap. So, we've seen different leadership, which is good. And what are you seeing today in leading?
Yeah, I'm still waiting for small caps.
Yeah.
I mean, they give us that little tease and then they pull back in.
We have that on Who Wore It Better later in the show. We're going to stack them up against something else.
All right. Can't wait to see where we're going with that. But it's an old adage in the technical analysis community. The CMT founder, Ralph Acampora, always had this famous quote, rotation is the lifeblood of a bull market, meaning money's not leaving the market. It's just going from one sector to the next. And what did we see in the third quarter? We saw utilities, defensive stocks like Staples lead, financials doing well. Now to kick off quarter 4, NVIDIA just broke out of a nice little triangular. I think you may have tweeted that. I don't know if I saw
close
you
to a
notice
record.
that. I noticed it. Technicians noticed it.
Yes.
But those stocks, that Magnificent 7 that didn't lead, it was a broadening out of the rally, are starting to come back. And we're seeing it in software. We're seeing it in cybersecurity. We're not just seeing it in the big names like Apple and Microsoft, but they're poised to go higher. So this rotational trade is just showing you the strength of this market because you want to see all stocks participate. And when one sector doesn't do well, like technology in the third quarter, the other sectors picked up the slack. So it was good to see.
What constitutes a rotation? Like if tech is down 2% and healthcare is up 2%, is that a rotation?
good
Is it
question.
5%?
Yeah, no, well, you need the other sectors to pick up the slack a little bit more because the way the sectors are weighted, technology is the highest weighted sector in the S&P 500. So when technology does well, those Magnificent 7, they call them the Mag 7. Why? Because there's 7 of the biggest stocks in the world market cap weighted. So when they go up, NVIDIA, Microsoft, Apple, the 3 most heavily weighted stocks. It's about 15% of the S&P 500. They go up, they're going to move the markets. And now they didn't, so we saw broadening out in utilities and financials. Berkshire Hathaway making all-time highs in the third quarter. That's a top 10 stock. Warren Buffett's baby.
Yes.
JP Morgan continues to do well. Goldman does well. So when you see that broadening out, that just shows you the health of the market. And when you talk about market breadth, not breadth,
Please,
like
yeah, talk
we
about market
speak,
breadth there. The
but
broad
the
and
breadth
Breadth.
with the D,
Breadth.
the breadth,
Thank you.
over about 75, I think it was 74% before I jumped on the show. About 75% of all stocks in the S&P 500 are above their 200-day moving average. What does that mean to me? That means it's a sign of health.
Yes.
They're trending higher, not going through the roof. There's no euphoria just yet. Yet the S&P 500 is up 20% without that euphoric rally. It's just slow, steady, rotating. This, to me, is the most positive thing we've seen in the market in some time.
I'd add one more comment to that. So I look at market rotation. If I see the S&P 500 relatively flat when a bunch of sectors are moving a lot, some up, some down, that is classic rotation because you don't feel the volatility in the index. You just feel it in individual sectors. Jay, I want to get back to software and cybersecurity. I believe IGV is making record highs or has been recently.
Yep.
And then you're specifically focused on cybersecurity. What do you like there?
Well,
Technicals, fundamentals?
Yeah, cybersecurity is probably, we talk about defense stocks and, wars, but where are we going to get hit if there's ever a problem? It's a cyber attack. And, people are putting tons of money into protecting basically their assets, whether it's banks or your own personal emails. Yahoo Finance, I'm sure, has some great walls in place just to access your regular everyday emails.
We indeed do.
Yeah. The codes change all the time. It drives me up a
Two-factor
wall.
authentication.
Yeah,
and
it's
the-
getting out of control, but it's there for a reason, because if someone's going to upset the economy, upset somebody's business, we saw it with CrowdStrike. My gosh.
Yeah.
These cyber stocks are what needed. And then as a technician, I look at what they're doing. They took a bit of a pause, and now they're breaking
ETFs?
out. The ETF. So the ETF is a basket of these stocks. So you can play individual stocks. And what I do is, one, top-down approach. So I look at the ETF itself. The ETF is breaking out. Now let's look under the hood. And in the case of cyber, we've got tons of stocks breaking out. Broadcom, symbol AVGO. Why isn't it BCOM? I don't know.
That's an acronym. An anachronism.
AVGO.
Yes. Yeah.
That's how I remember it. But CrowdStrike is the one that's been holding it back because they had their problem with Microsoft and Delta.
Yeah.
But you look at a stock like Cisco. I hate that I like Cisco right now.
I liked it in 99.
And it's right where it was trading in 1999.
That's
but
amazing.
It's finally starting to break out, at least on a yearly basis. I don't think it's one of these stocks that you want to pour money into. It's going to run away and get euphoric on you, but it's slow and steady growth. And they did that deal with Splunk also in the cyberspace, hence Cisco more of a cyber play. It's starting to act well. So the stocks underneath the hood are doing well. And one of its biggest participants, CrowdStrike, hasn't really participated. It's still 26% off its 52-week high. If they can get above 300, it's like 298 as we tape this, it's got room to run. So I think that would help the sector as well. And then software is doing well as well.
Within tech, how do you view kind of the difference between the software side and the AI chip side? They're different, but they're both tech.
Yeah, well, AI is more speculative, and AI is going to be more volatile because we're still trying to figure out how AI is going to be incorporated into our everyday lives. So, Elon Musk is going to have this big cyber event. It's not cyber event.
Well,
the
robotaxi.
robotaxi
Right.
event. And, it went up 35% up until a week ago because Tesla likes to trade on hopes and anticipation. And we always rally into anticipation, buy the rumor, sell the news. So we'll see how that's looked at. But AI is the story there. Autonomous driving, robotaxis. We thought Jetsons would be here. It's 2024. I thought I'd be in a flying car.
I was looking for a robot dog.
Man,
they're
I
not.
thought I could
They're
just
not
go out
just
to the bar and then just get in a car and it flies me home by now. And you just can't do these things.
Elon Musk is going to solve that.
Well, let's hope he does. But to get back to your question, software is incorporated into our lives,
And it's
that's
a
what
service
people
model,
are using.
too.
It's exactly it, and that service is still extremely valuable and
recurring.
continues to grow, and it is recurring, and it doesn't get cheaper, does it?
No, never.
It never does. So that is slow and steady growth. But what people, speculators, people who want that next big thing, they see the numbers that NVIDIA continues to put up in the AI space, and then you see a little bit of a euphoric. It gets a little above its skis. The PE ratios get skew, but I don't think we've gotten to a point where it's out of control at this point. So AI is a story that we're still discovering. We still learn about every single day. And I think in the next 5 to 10 years, that's where it may become like a software stock and slowly grow. But right now, the growth is potentially larger than any other sector in the world.
I want.
Yeah.
Oh, go
Oh,
ahead.
yeah, you're
I
right.
want to touch on cyber. I want to keep it with the AI trade. You mentioned utilities, which is kind of a backdoor AI play, but it's also been very slow and steady. What you kind of want to see. Now we just had the worst down day in a few months, but it was only it wasn't that big. And you look at the chart; it's from the lower left to
Love
the upper
utilities.
right, and
Yeah.
that is the low volatility, risk-adjusted returns. It is right there.
All right, put up a 5-year weekly chart in utilities for me. My God, talk about a nice rounded base and then a breakout. Yes, it's gotten overextended. It's become a little hypey, like
utilities,
Like,
hyped.
like I say, they're not your grandparents' utilities anymore. We're not playing for the dividend. And in fact, speaking of cyber attack, American Water just had a cyber attack earlier in the week. The biggest water utility in the world did not affect the stock, but the utilities are now an AI play. Why? Because they are powering the data centers. How are they going to power it? Nuclear energy.
Yes.
We're looking for a pivot, something that is more efficient, hopefully cleaner. This is where the debate's going to go over the next few years. But we saw it in Constellation Energy. The stock was up 30% a few weeks ago. Why? Because Microsoft is investing in their nuclear power plant. Where's that nuclear
that's
power plant?
incredible.
3 Mile Island.
I grew up-
Harrisburg people, we may know a little bit about 3 Mile Island as older folks in 1979, but it's coming back.
Yes, and we have to break right here. Take a quick pause, but coming up, we're going to talk Fed rate cuts, how big, how small, and we are pitting the universe of small caps against their larger siblings. All right, we are back, and this episode is brought to you by the number 25. The market is now pricing in one cut of 25 basis points or 0.25 percentage points at the Fed's next meeting. I believe November 1st is when they come out with the decision. And this sticks out to me that the odds of going 2 rate cuts, 50 basis points, have dropped to 0 since the jobs report. And I've been writing about this in the morning brief that it seems like no landing is back on the table. The risk of reacceleration of inflation to the upside, as told by those higher wages, higher than expected. What do you think about this?
Yeah, it's what we focus on, and it changes week by week, data point
Yes.
by data point. I don't recall a cycle where we've been so hyper-focused on CPI, then the unemployment, CPI, then the unemployment, and how these odds of rate cuts have constantly changed. I'd love to do an expose on who is constantly just changing their mind this quickly. It's crazy.
Well, we've been on the knife edge, like the razor's edge for months.
And they're never right. 6 weeks out, the odds are we're going to have a 50 basis point cut. Now we're 3 weeks out from the next meeting, and it's no 50 basis point cut. And
I'm
there's
waiting for
a
the hike.
15% chance that we won't do anything, which it could possibly happen.
Yeah.
We'll see where these inflationary data points come in. If the CPI starts to go a little bit higher, meaning inflation is ticking up, well, we could kind of expect that as rates get cut, but it is a
You don't want to
tricky-
see it too much.
Exactly. It's a very tricky thing trying to navigate this soft landing. So no landing, yes, it could happen. But when I was just looking at this data before I came onto your show, going back to 1980, when we start that rate cutting cycle, there's only one where we've hit that soft landing, and that's 1995.
Yes.
And that lasted up until 1999, where we slowly cut rates and the market took
And
off.
yet that's the base case. The one time it's only happened one time since 1980, but that seems to be the base case now. That's why I argue maybe we shouldn't expect that as a base.
Well, I'll push back then. What is happening that happened in 1995? We have a brand new technology. Back then was .com, the internet. You may be too young to remember this.
I was 1 year old.
Yeah, but thanks a lot. But what is going on right now is we're seeing AI and technology, talking about cyber, talking about continued software growth. And we are in, as some would call it, the next revolution, the next phase of monster growth when it comes to technology. And what we've seen in this market, the way it's acting, the way it's breaking out from that 2022 base, breaking out in 2023, continuing in 2024, the setup they're frankly there to continue this bull run, and I don't see the economy slowing so much where we're about to hit a recession. And when you talk about the Fed and you talk about recession, when you cut rates in a recessionary environment where it leads up to a recession, there have only been 3 times we've led up to a recession when we've cut, and that was pre-dot-com bubble burst,
That was a big
9/11.
one.
All right, pre-Great Financial Crisis, and then pre-COVID. Now, no
So
one was
those are the
predicting
3
COVID.
in my lifetime that I know. So that's-
Exactly. Now, I'm not going to predict a black swan event, but I don't think we're poised to have a recession over the next 12 months. Some people may disagree because we are setting that stage. If inflation does continue to ride, if we can't keep jobs at this level, historically low level, then you may risk the onset of a recession. I don't see that right now. What I see is slow, stable growth with some pockets of acceleration from time to time. But who knows? From data point to data point, we're changing quickly, and
Yes, we are.
that's the biggest change. Things happen faster than they've ever happened before. So just keep the seatbelt on.
Can we clarify what happens in a no landing scenario?
Mm-hmm.
You don't land.
Yeah.
What
I mean,
does that mean?
we're kind of in it right now, if you think about it. I mean, we haven't gotten inflation to the mandated 2%. Where they come up with this 2%, I've heard some story. I don't know where they got that number, but what I like are the trends. Inflation is getting under control. I mean, we're still paying more year by year, but it's only 2% more than last year instead of 9%.
It just
when we
adds up.
peaked
It's
in
20% since 2019.
Exactly. It's so we are getting inflation to trend down, unemployment to remain stable. It could tick a little bit higher, but from a historical point of view, it's okay. If we stay at these levels now, if we tick up, then the no landing play is there, because right now I believe we are trying to land. Let's see if we have to put wheels up before we hit the ground because something happens on approach.
Well, it is time for Who Wore It Better. And on today's, we are going to address market leadership. Excuse me. We have the S&P 500 is up 21% this year so far. That's the best of this century. You'd have to go back to 1997.
Yep.
So, and we're celebrating the 2-year anniversary of this bull market right about now. Small caps. So we got to talk
Okay.
small caps. They've been largely dormant the first year of this bull market, but they've come alive. I said last November, that was kind of the beginning of the second year. They haven't done so much recently. Now, last November, we did see them kind of spike up. So my question here is it going to be the small caps or the large caps, you think, leading into the year end? And it's very loaded, but
Yeah, no, I think it's going to be large cap because I think technology is going to catch a bid.
it just broke out.
Exactly. Like I said, the software stocks and the cyber stocks, I believe NVIDIA, it will test that 140 level, which is its high. So I think technology will be the leader. Now, will small caps, join the party a little bit? We saw last year, October 27th to December 23rd, small caps gained over 20% in that time period. So when they move quickly. The beginning of the third quarter, as we got, at the beginning of July, for a 3-week stretch, they were up almost 10%. So they're making higher lows. They're slowly catching up. They have not gotten to their November 2021 highs, which blows my mind considering every other index in the world. Mid caps are where it's at right now. If you look at the mid cap index, that continues to chug along. No one really talks about that. But if, gun to my head, and I know, you're putting me on the spot here.
Always. That's our
I
job.
still think large caps are going to go. I've been waiting for this small cap rally to happen. I think
Here's a
you need
prediction.
exposure. What's that?
All right. So I think if the election is resolved quickly, that's a lot of fears are going to evaporate. So if we know the next day or the day after, I think small caps lead into the end of the year.
Well,
if it's disputed,
okay.
which is a possibility, and I don't know that you find that leadership.
Disputed in 2020, and it still went up and made new highs. They were riding on the capital, and 2 days later, we were making new highs in the S&P 500. Small caps, went along
was
for
the
the
case
ride,
in
not
2020.
new highs. So.
Fight between
All
the
right.
two.
No, I'm just, a lot of people will talk about the election, and I really don't care. I'm sorry. I mean,
No, that's fine.
I watch
market
the stock
technicals.
market, and right now the stock market's telling me we don't care about your politics. There will be certain sectors that do well, but then you think about it. Energy was doing well into a Trump election,
Yeah.
and then it was the worst performing
Everybody
sector
got
when
the
he got in.
sectors wrong.
And then when Obama and Biden got into office, it was solar, green energy, and they got into office, and those stocks fell. So
I think that kind of analysis falls flat.
I like defense stocks. I like cyber stocks, regardless of who it is, because we see there are problems globally, and we see what some of the defense systems have done in Israel during the last few
Yes.
weeks, unfortunately, but they've worked. And the American model, these companies that have put money into cyber, into defense, the Raytheons of the world, the level 3 Harris, is it level 3 Harris?
Yeah.
Okay,
L3.
so many mergers. United Technologies, it's Raytheon United Technologies now. These companies will do well as well, regardless of who's in office.
Okay, back to basics for a second,
Let's
Jay.
go.
You think tech is going to be a leader
course.
later, but we are seeing a rotation. We're seeing the market broaden out. Is now the time to get into tech if we're seeing it broaden out now and you think tech is going to gain?
I think a diversified portfolio is the way to go. Always.
Not that answer.
I know. You want me to be boring? You want me to just give
I want you
like
to say
one
tech.
magical stock and say, no, I think you always want to be overweight technology because that's where the high growth is. And if you have the stomach for some of the volatility, then by all means, be in technology a little more than any other sector out there because technology's high growth, high reward, and that's where people continue to invest. But you look under the hood, materials have broken out. Healthcare looks good in certain aspects. These are great sectors to be in right now. Staples continue to do well. I think Pepsi
that's
may have
pure
found the
defensive.
low after its bad earnings this past week. So yeah, right now it's a good time to be bullish and to be diversified, but I would be overweight technology. It may not be the leading sector at the end of the year, but talk to me in 5 years, 10 years, and I would be in technology more than
And
any
happy.
other sector.
I'm gonna call you up, all right?
Okay.
All right, we want to get personal. You have a meeting tonight, CMT meeting. It's
Okay.
for chartered market technicians. Jared told me it's like a Shark Tank for
Style?
technical analysis.
Oh,
People
Shark Tank for
pitch
technical.
you?
Yeah, well, this is a new event. The CMT Association, we've been around for 52 years. You should come to one of our little
demonstrate
get-togethers.
tonight.
We get wild. The
I'm coming.
technicians know how to party. But what we do is we get together every so often in the different chapters, and we talk about the markets, but we do it over a few beers. It's fun. Tonight we have something new. My Tom Bruni, who's
We've had him on the
CMT
show.
and it was a phenomenal
Yes.
episode, by the way.
Thank you.
He came up with this great idea. I'm just going along with it, where it's called Pitch the Pros. And so many times you see people like me on TV and talking about charts, but we have so many great young minds and young technicians who don't have that opportunity. So we're giving the floor to 4 or 5 young technicians. They're going to show us their ideas. We're going to critique them. Nice. Well, it depends. If the Phillies are losing, I may be cranky, but we'll see what happens. But it's a great opportunity for people to get together, share ideas. I learn just as much from the young people in our community, sharing ideas, whether it's on social media or in person at events like these. So the CMT Association really likes to embrace their young, up and coming stars because these kids, they're 20 and 30.
Yeah.
They really are into the markets, and we want to give them a platform as well.
Jay, we got 30 seconds. You just went golfing in Myrtle Beach with
I did.
some
I
old
did.
friends from the New York Stock
Oh.
Exchange. What's it like to just reminisce?
It's great. We talk about all the stupid things we used to do before compliance and human resources was
Before
really in
FINRA
place.
got involved?
Yeah, the 90s, like trying to drink a gallon of milk
the NASD
in under 30 minutes. You just can't do that. Your intestines
milk
will
challenge.
explode.
Yoo-hoo. Chocolate milk.
Chocolate milk. I think I could do it, but I wouldn't try. Saltine crackers can you eat 4 in
Yes,
2
whistle
minutes.
and
2
whistle
minutes
after.
with no water. No water.
Yeah.
though.
We
Yeah,
do
this
have to
isn't like
wrap.
hot dog buns and cheating. You got to eat. So we just had a lot of laughs talking about the old times, and it's always good to catch up with the old crew, and then golf.
Yeah.
Always fun.
All right, that is a wrap here for Stocks in Translation. Be sure to check out our other episodes on the Yahoo Finance site and mobile app and podcast platforms. That's all for now. Keep it tuned to Yahoo Finance.